Andrew Holland, CEO Investment Advisory at Ambit Capital, joins in on the show. Andrew, hi. 5,300 almost in sight now for the market, but do you think policy reforms is key to the market movement from here onwards?
Yeah, I think it is actually. I think the European Union have done what we were hoping for in terms of their roadmap, at least for the next few months. And if they can pull that together, then I think the markets will continue to trade higher. I think a lot depends now on the ECB this week. Hopefully they'll follow through with a rate cut there. But if the government looks across and see what little the European Union actually did in terms of detail, but at least said we're going to do this, then it doesn't take much to move markets. So if the Indian government will stop having meetings after meetings and actually deliver something, I think that would be all the market needs to get up to that kind of 5,600, 5,700 on Nifty. It wouldn't take very much at all. We're all waiting with bated breath, and I don't think it would take much to move the needle for us to get more positive about India getting back on track. But you have a window of opportunity, and those windows become very short indeed. So the market's pricing in that the Prime Minister will do something. We hear about all the meetings he's having, but we need to see some action now. I say sometimes words will just help the market move forward, rather than maybe we see actual kind of money being thrown into the economy. So just give us something.
Andrew, did I hear you say 5,600, 5,700? Are you making a case that we are going there?
No, I've always been of the view that we would see a summer rally. Now, it's always, in these volatile times, difficult to gauge where you're going to be in the index. But with some government help now, I can see the market going there with no real problems at all. I think, the next few months, the news flow, I think, from Europe and the US will settle down a bit. I'm sure there's going to be a few scares along the way, but the roadmap for Europe is set. We could see the Fed look at some easing, sometime in August, before the presidential elections. It's probably one of the last windows they have. So you have kind of an environment there which is, could be the risk on trade continues a lot longer than we think. And the good news is commodity prices, are not really kind of trading up, because the money in Europe is actually focused on fixing a banking system rather than anything else. The one thing that does kind of worry me very short term is this big banking and LIBOR scandal in the UK. That could have big implications for the whole banking sector, not just for the UK banks, but across Europe as well. I'm not sure really what all of it means. It could mean a huge restructuring of banks, which might not be good news for IT companies, particularly those focused in the the financial services sector. So that's just one area to look out for. But if the government come in and say something positive, I think the markets will take both hands and move the market higher.
Yeah, and you just want to stretch that point forward. Do you think the markets are going to correct significantly if the Indian government fails to deliver post the presidential elections? Because that is an anticipation that the market is, building towards.
I think that would then depend on where the global environment is in terms of the mood check. But if nothing happens by the end of August, and I'm talking globally now, from more kind of steps moving forward in Europe, and obviously nothing happening here, then the market will vote with its feet and again push policymakers back to the table, because whilst the Europeans before their summit were saying, particularly Merkel was saying, we don't rely on what markets think, we have to do what's right. You can see what they did was very market friendly, and that's given some breathing space. But as I said before, the window of opportunity gets shorter and shorter. So we'll sit here in hope, and we'll listen about all the meetings that the Prime Minister's having, but we'll need some action soon. So I think you have at least till the end of August for that to happen.
So Andrew, what is the real level for this market? The one we reported in the month of May or the one we reported in the month of June?
That's a good question. We came into June, obviously with the big event of Europe, thinking that, we were a buyer. We were a buyer if the Europeans did things right, and we were a buyer if the Europeans didn't. The markets fell by whatever they would have fallen by at the time. So I think the valuations are compelling in India, and I think that's what is holding up the market. The long-term story yet, is still intact, and all we need now, as we're seeing around the world, is some government policy. So if you think about what the ECB president said, he said, it's really up to the European politicians to start getting their act together, and I'll support as much as I can, and that's the expectation now from the ECB when they meet for interest rates this week. I think the RBI is saying exactly the same thing. They didn't decrease interest rates at the last policy meeting, and said to the government, it's now your parcel, you please try to fix something. I think if the government do, we could see the RBI react by lowering interest rates to support those moves. So that's what I think everyone's focusing in at the moment, and why there's so much optimism ahead of one, the ECB, and two, hopefully moving from meetings to actual real reforms or real move by the government to free up the economy and give confidence back to India Inc.
And within days from now, we would be waiting for the IT pack to come out with its numbers, Infi being the first out of the lot. And there is a general concern that perhaps IT as a pack or basket may be looking at cutting the guidance this time around. What is your view on that? And do you think when it comes to names like Infosys, that guidance cut is already in the price?
Yeah, I mean, it took a beating last time around, and I don't think it's really kind of recovered so much from that. I think expectations are running very low for the whole sector. We've been concentrating more of our bets on the kind of mid-cap companies in the IT sector, where we think there's a lot of value, and also, been concentrating on that kind of whole Tech Mahindra Satyam merger, because we think that changes the game changer for both companies, and that makes a lot of interest to us in terms of valuations. But as I said, there's something happening in the banking sector emanating from the UK and the LIBOR scandal, which gives me concern that a lot of these big banks will just put on hold or freeze any spending until any restructuring plans or what they have to do going forward is clear. So that's a bit of a concern for me. So I wouldn't be chasing any of the large cap IT companies at the moment. I say our concentration has more been on the mid cap, where we do see consolidation going forward as well. But we have to be very selective.
And for those who are buying stocks like L&T, BHEL and Crompton Greaves with the hope that in coming quarters the investment cycle will pick up, do you think they will get it wrong?
No, I mean we've been chipping away at these stocks, and obviously, when the market moves, the expectation are that these have been beaten down stocks for many years now. I'm not overly convinced that it's going to be a flood of orders coming through. I think there's a lot of environmental land acquisition problems in India that has to be resolved first. If that was to happen, then I'd be more interested. I'm kind of getting a little bit more kind of I wouldn't say bullish, it's probably the wrong word, but a little bit more positive towards the power sector. I think the coal price could continue to head down, and that's going to be good for the overall sector. So power is where I'm looking at a little bit more closely now. I haven't really dipped my toes, but I think I will, depending on some of the noises coming out from the government. But more fundamentally, it's looking interesting. Might not look so interesting from all the power problems that we hear about, but when that happens, there's change, and when there's change, there's opportunity.
As a house, you're bullish on Kotak Mahindra Bank. What's the thinking behind that? It's a great franchise to own, but a very expensive stock. I would say the most expensive banking stock to own. What are the valuations? 5-time price to book FY13 estimates?
Yeah, I mean that's from our kind of broking arm. We continue to stick to the HDFCs which we feel will just continue to do well. In a good environment and a bad environment, they don't shock you to the upside or downside. But the one thing about the banking sector, I would say, and this is an Asian thing, not just an India thing, given what we're seeing now with the global banks, I mean, most of them are pulling out or selling assets in Asia. They're taking money back home because obviously they need to prop up their own balance sheets. I think some of the problems that I've mentioned before in the UK will accelerate that even further. So if the Asian growth story is going to continue, then it's going to be the local banks who'll be funding this growth, and they'll be at the forefront of it. So that's the great news. So for the whole banking sector, it's a big long-term theme which you have to play into. Yes, there's going to be times like we have now with high interest rates, restructured loans. But if you believe that India is going to continue to grow at between 5 and 8% over the next 4 to 5 years, these banks are some of them are looking quite cheap. I think you have to look at who's going to be the leader. And yeah, five times book might be pricey now. We said that about all of the consumer stocks, but if you look 3 years down the line, is it really 5 times or was it really 1 time? And I think that's what you have to look at in all of the banks. Who's going to be the leaders going forward? 5 years ago or 6 years ago, Yes Bank was a very small bank.
Andrew, so if you have to construct a portfolio of let's say 3 or 4 large cap stocks, what would you like to buy in that portfolio?
So HDFC is part of that. We've added Larsen and Toubro in the early parts of the year, and we'd look to add further in the sector. I think in the IT sector, as I said, we're liking the Tech Mahindra Satyam story quite a lot, and we have a smattering of consumer good companies as well, which helps us on bad days when the market falls. So we started off defensive at the beginning of the year, and increasingly moved more into the banking and the autos and the infrastructure companies, and now we're looking a little bit more at kind of the power, real estate, to see where the value is and who's going to emerge as the leaders from there.
Andrew, what justifies the movement that we have seen in the entire cement pack? Because irrespective of what the CCI has to say and the outcome of the probe, these stocks seem to be on a tear.
Yeah, I'm surprised too. I mean, my thoughts around it was that it'd be difficult for cement companies going forward until this has been resolved, to kind of go around increasing cement prices. Maybe a bit like the DLF case. When it's not there, no one thinks about it until the news comes through that it's definitely going to happen. So that's all I can think of. We're not really massively exposed to cement because of this report and the implications it could have. So maybe in these kind of markets everything moves up. They did get beaten down a little bit when the news came through. It's not a sector I would kind of naturally chase at this stage.
Andrew, final question. When you always know my final question. Yes, you've guessed it right. What are you buying in your personal portfolio?
Again, I haven't done anything in my personal portfolio, and that's not for of lack of wanting to. It's more that I kind of position myself what I thought was correct, and hopefully that's working through. So I have some long-term investments. I don't tend to trade too much. That's my day job rather than my
Have
my
you convinced
job.
your wife not to invest in gold, or she's still ignoring your advice?
No, now she's saying that the wine investments we made some time ago have really appreciated because the rupees helped. So I both get the wine appreciation and the rupee depreciation. So she's saying we should do more.
All right, Andrew, wine investments, classic investment. Appreciate your time, and thank you for joining us on this edition of First Trades.